What's up guys, Trader Judd here, back with another Forex video. In today's video we're going to go over supply and demand zones and how to draw them, understanding why these are important and why they are a forefront in my Forex trading, and how you can use them and implement them into your trading, and why I truly believe they are beneficial. So we'll go over exactly what they are, why you should use them, how to draw them, and how to trade using them. All of that in today's video. If I missed something or if you have questions about something, go ahead and leave a comment in the comment section down below, or send me a message on Telegram and I'll be happy to respond to any and all questions. So without further ado, let's go ahead and get started. Alright, so when looking at supply and demand zones and how to really understand supply and demand zones, the way that I go about it, I'm not really sure if it is quote-unquote the correct way, but this is the way that works best for me, and this is the way that I go about doing it, and this is the way that I think about it. So when drawing supply and demand zones, if you've watched my video on support and resistance levels, it's similar. I'm not going to say it's exactly the same because it's not, but it is similar. Instead of starting on the weekly time frame like you would support and resistance levels, with supply and demand zones, I strictly start on the time frame that I'm trading. So in this case, it would be the 4-hour time frame. Again, we're looking at AUD JPY on the 4-hour time frame. And I am looking to draw one or two supply and demand zones above where price is, and one or two supply and demand zones below where price is, unless price is currently at a supply and demand zone. And the way that I go about doing this is I zoom out big picture, just like you would do to draw support and resistance levels, but instead of drawing support and resistance levels, or instead of using a horizontal line to identify it, I'm going to use zones. Now, as you can see, because of this massive dip down that we had on JPY pairs last week, you have to go out pretty dang far to find price below where it currently is. It can be done. We have to go out really, really far, which we are going to do. So I'm going to backtrack over here, and we can identify this level right here as price is currently above that. You can see the green line represents where price is currently. And we can see that this right here is a good area for supply and demand and support and resistance. But what we're going to do is I'm going to find a candlestick that best represents or encompasses all of this, that's not super large. So what I'm going to use is, I think I'm going to use this candlestick right here, this bearish hammer right here. We're going to identify that. I can bring it out a little bit just so that we can see it without actually fully adjusting it, and we can see where price is respecting it in this little area. And then what I'm going to do to make sure that it reaches all the way to where price currently is, we're going to type in coordinates where these bar numbers are. I want this to go backwards to as far back as it can go, and then I also want this to go forward as far over as it can go. We're going to hit OK, and so that will extend that zone out as far as it will go. Now, we could use one of these levels or one of these candlesticks down here as well. I'm not going to, because like I said, it's been a very long time since price has been as low as it is right now. And sorry, my cat's playing with stuff behind me. And so I'm not going to draw more than one zone behind me. But as you can see, this zone extends all the way through where price currently is. Now we're going to draw our second zone, which I'm going to base off of this green candlestick right here. We'll extend it back a little bit just so that you can see that it is valid. We'll extend it forward, and we can see that price is currently in that zone. And you can go back and do the coordinates on this if you would like. I am not going to, because there's really no need to right this minute. But like I said, if you want to, there's no problem in doing that. It's just not something that I'm going to personally do. Now we're going to draw. Let's see here, before I draw anything else. Yeah, so now I'm going to draw based off of, let's go based off of this small, we're actually going to use 2 candlesticks. So the candlestick that we're using is this green bullish candlestick over here. We're going to extend that this way and extend this all the way over again. And then we're also going to use this one all the way up here. And that will be our other one. And then if you wanted to mark this level right here, you could also mark that level right there, and that would be fine. I'm personally not going to. And the reason for that is because I don't like drawing zones really close together. You could also mark that with a horizontal line. That would be acceptable as well. But as you can see, this is a lot like drawing support and resistance levels. It's very, very, very similar, but it is not the same. And so, why would you use this over using support and resistance? That is a great question, and the biggest reason why I say, or I prefer using zones in most situations, is because when you're using a horizontal line, that horizontal line represents one price, and that's it. It does not represent anything else. And if you've been trading for a while, or if you just look at the charts, you can see that price doesn't normally hit just one price level and then reverse. Price typically reverses inside of an area or a range in price. The zone right here represents that range in price. So when price is at that zone or inside of the zone, there is a good chance that it will slow down, consolidate, or reverse, or continue. And so as price reaches zones, or is currently sitting in a zone or relatively close to a zone, I do not trade that particular pair until it has broken out of a zone, which, as you can see right here, we have price came into this zone and now has broken out of the zone, and now currently looks like it's retesting that zone, but we won't know for another 2.5 hours whether that is a valid retest or if it is going to continue to consolidate around the zone, if it's going to push up farther. We really don't know yet. And so zones help with the mental mindset of not executing trades prematurely, because you're waiting for price to react to this zone of price instead of waiting for price to react to an exact, or I guess, yeah, waiting for candlesticks to react to an exact price. It's extremely beneficial with mindset and not getting into trades too early, and understanding that price moves around, it jumps around, it dances around, and you have to wait for clear-cut direction and understand that the candlesticks will tell you where price is going. You just have to wait for them to do so. So you have to be patient and wait for price to break out of this. And that's a lot of times that's what people struggle with the most in trading, is being patient and waiting for the right opportunity. And drawing zones really helps with that mental mindset and understanding that you don't react, you don't react to price reaching the zone. You react to what price does once it reacts to that zone. So you react to the reaction of the price, and that's when you execute trades. Uh, a lot of times, what I see is that, especially people that like to use um, buy and sell orders instead of market execution trades, is they wait or they set buy limits, sell limits, buy stops, and sell stops at support and resistance levels, expecting uh, one thing to happen at that specific level, which sometimes can lead to good results, but it can also lead to less than ideal results. And so my thing is, or my approach to this is that you can have much better results if you wait for price to react to these zones that are drawn, instead of setting a buy order or a sell order, a buy stop or a sell stop at a support and resistance level. If you watch once price reaches a zone, how it reacts to that zone, instead of executing trades once it reaches that area, waiting for price to react either to break through and then come back and retest, or to reject that area of price and go or reverse, I guess is what it would do. This really helps with that. I much prefer to use zones and trade with zones than I do with support and resistance levels. However, support and resistance levels do have their place. If you have an example where price continuously hits one small area, continues to retest and retest and retest that, again, a very small area, then go ahead and use support and resistance. But in situations like this, where we can see that this price doesn't exactly line up with this price, which doesn't exactly line up with this price, which doesn't exactly line up with this price, right? So this zone encompasses that. It helps us understand that. It gives us a better, more clarity. It allows that small range of where price reverses at, even though it's relatively in the same area. That zone represents that. And yeah, so that's the reason why you would use it. That's the reason why I use it in the trading or in the markups that I have, and that's how I mark it up. So again, all of the candlesticks that I used, I'll highlight those. So it was that candlestick, the bearish candlestick there. I'll change the color of this to red, just so that you can see it a little bit better. And then this level right here was based off of this green candlestick. Again, we'll change that to green. And then this one was represented off of this green candlestick. And then the one on the very bottom, as you know, that was the first zone that I drew, and it was from way, way, way to the left, so we aren't going to revisit that one. But yeah, so you're looking for a candlestick that the width of the candlestick body, and or you can do it just off the body, or you can do it off the wicks and the body, or you can do it off of one wick in the body. It just depends on how large you want to draw your zone. One thing that you do not want to do is you do not want to have a zone that is this big. That is not beneficial, right? That's one candlestick. That candlestick's worth 600 pips. It's not beneficial. To have a zone that large is not something that's going to help you, because price will stay within a 600 pip range for a very long time. Usually, not always, obviously, but usually price will stay in that range for a very long time. You don't see, especially on Asia, you don't see price moving 600 plus pips a day. Rarely, if ever. And so you want to keep your pips, or your zones, excuse me, to like 25, 30, 35 pips at the most, maybe 50 pips if it's on a pair that moves really fast, like GJ or any GBP pair will your zones will be a little bit larger because the candlesticks represent more pips, right? They're more liquid pairs, and so when the liquidity rate is higher, the candlesticks are worth more pips, and therefore your zones are going to be worth more pips as well. But on AJ, we can look and see that this pip, or this zone, is worth 44.5 pips. This zone down here is worth 35 pips. This zone right here worth 30 pips. And the zone at the top probably a little bit less, 23 pips. And so, you're not looking for 100, 200, 300 pip range. You're looking for 25, 35, 45, maybe 50 pips at the most. And that's the range that you're looking for. You're looking for price to break out of that, plus or minus 50 pip area. And then you're looking to profit from the breakout of that area down to the next zone or up to the next zone, depending on if you're buying or selling. So hopefully that kind of gives a breakdown of how I use zones and how I draw zones. Hopefully this has been beneficial. If you have any questions or comments, please leave a comment in the comment section down below or shoot me a message on Telegram, and I'll be happy to answer any and all questions. If you like this video, go ahead and hit that thumbs up button. If you haven't subscribed to the channel yet, go ahead and hit that subscribe button. And again, I hope you guys enjoyed this. I am going to be bringing more content like this that breaks down or kind of explains how I do things that you see on my charts week to week on the weekly Forex Outlook videos. If you haven't watched any of those videos, I do a weekly Forex Outlook video every week. It goes over 10 different pairs on the 4-hour time frame. It gets posted every Sunday, so check that out. But yeah, so thanks again, guys. Hope you enjoyed it. I am out. Have a great and wonderful day.